In the past years, Alphabet has been a highly successful investment. But so far, the Alphabet stock price is down over 30% from its all-time high, and the third quarter results will be released on Tuesday, October 25. So it's about time to take a closer look at Alphabet and see if it may be worth an investment. Before we start, please take a look at the disclaimer. As inflation rises and the economy seems to slow down, Google also starts cutting costs. In fact, it's cutting half of its research and development projects. Therefore, the CEO, Sundar Pichai, hopes to make the company 20% more efficient. Last week, a lot of people have been shocked by Google's announcement that they are going to shut down Google Stadia. So there's a lot of noise going on, but I, as a long-term investor, don't care about short-term news. I care about long-term investments. And there is a lot of data suggesting that companies with a high free cash flow yield outperform the market. And that is especially true with rising interest rates, because those companies don't have to borrow money at those high rates. Their risk of getting bankrupt is lower, and they can use their money to make smart acquisitions or buybacks. If we take a look at the diagram, you can see the blue line are companies with a high free cash flow yield, and they really outperformed the market. And even better, they also performed well during the financial crisis. And I strongly believe that Google stock belongs in that blue category. Let me tell you why. First of all, Google has a history of strong free cash flow, and it operates at a very high margin. It also has more cash than debt, and it can use this cash for buybacks, which is exactly what they do. In the first half of the year, they repurchased stocks worth of $28.5 billion. If we multiply that by 2, we get yearly buybacks of $57 billion. At a current market cap of $1.3 trillion, this means we are getting a buyback yield of 4.3%, which can basically be seen as a tax-free dividend, as your part of the company increases over time. This is also one thing that Buffett really likes about Apple. So now we have seen why Alphabet is a stock with a high chance of performing well during a stock market crisis. Let's take a look at valuation, but before we have to take a look at some facts. In the last 5 years, Google's average year-over-year revenue growth was 23%. The earnings per share growth was 39%. Let's also take a look at last quarter's growth rates. I think they were pretty good, with revenue growth of 13% year over year, especially considering the tough times we are in. If we take a look at the operating results, you can see that most of the operating income comes from Google services. And you can also see that the Google Cloud business isn't making any profit yet, but it is growing at a very fast rate. And once it gets profitable, I see it as a growth driver for profit. So now let's get into valuation. First, we have to adjust the stock price. It is currently trading at around $102. In a normal case scenario, I think a 20% growth rate is a bit too optimistic, as we want to be more on the conservative side with our estimations. So let's adjust it down to 15% and then steadily decrease it to 10%. And for a 10% growth rate, a free cash flow yield of 6% is also very reasonable. By the way, I'm also calculating in those share buybacks Alphabet did in the last years. For the best case scenario, 30% growth also seems too optimistic for me, given the current crisis we have. So let's adjust it down to 17% with a fair free cash flow yield of 4.5%. And in the worst case scenario, I like to be very conservative. I think Google can easily grow with more than 8% per year for the next 10 years, but we can still see that with our very conservative growth rate, we have a potential internal rate of return of 11%. Let's also take a look at the potential return for our weighted scenarios. If we buy right now, we could potentially get a 16% year-over-year return, which to me seems very attractive for a company with a great business model and low debt. Therefore, I recently invested another $3,000 into Alphabet stock, which actually makes it my second largest position. If you have any questions or comments regarding this analysis, feel free to leave a comment